If you've ever heard someone say the stock market went up today and thought, wait, how does that even work? You're not alone. Most people hear about stocks on the news, but few actually understand what they are. And here's the cool part. Once you do, you'll realize the stock market is actually one of the simplest and most powerful tools to build wealth in history. Most people imagine the stock market as a casino, flashing screens, wild charts, and people shouting on phones. But that image is outdated. The stock market is simply a digital marketplace, like Amazon, but instead of buying shoes or phones, people buy ownership in companies. Let's make it super simple. Imagine Apple. You know the brand. iPhones, AirPods, Macs. Apple wants to grow, but growth costs money. New factories, better designs, more engineers. So instead of borrowing billions from a bank, Apple raises money by selling small pieces of itself called shares or stocks. When you buy one, you actually become a part owner of Apple, even if it's just a tiny piece. If Apple launches a new product and the company's value increases, your little piece becomes more valuable too. That's why the stock market exists. It connects companies that need money with investors who want their money to grow. Now, here's where it gets interesting. The stock market isn't a single place. It's not a building in New York with people waving papers anymore. That was decades ago. Today, it's a global network that runs online through different exchanges. The New York Stock Exchange, the NASDAQ, the London Stock Exchange, Tokyo, Frankfurt, all connected digitally. Every weekday, millions of people trade billions of dollars worth of shares in milliseconds. Prices go up and down constantly. Why? Because of supply and demand. If more people want to buy Apple, then sell it. The price rises. If more people want to sell, it drops. But here's the funny thing. These price changes are often emotional, not logical. Let's look at an example. When COVID hit in early 2020, markets around the world crashed. People panicked and sold everything, but within months, the same market bounced back to record highs. It wasn't because the world suddenly fixed itself. It was because investors realized companies like Amazon, Netflix, and Zoom were actually growing faster than ever. That's emotion, fear, then optimism, moving billions of dollars. Now think about long-term stories. If you had invested $1,000 in Amazon when it first went public in 1997, today that would be worth over $1.5 million. That's what happens when you give your money time to grow with a great company. Of course, not every story ends that way. For every Amazon, there's a company like Kodak or Blockbuster, once legendary, now gone because they stopped adapting. That's what makes the stock market fair. It rewards innovation and punishes comfort. And here's something most beginners don't realize. You don't have to pick winners manually. That's where ETF and index funds come in. They're like baskets of hundreds of companies all at once. When you invest in an ETF like the S&P 500, you automatically own a tiny piece of 500 of the biggest US companies: Apple, Google, Microsoft, Coca-Cola, and hundreds more. It's like saying, I don't need to know who wins the race. I'll just bet on the whole track. This is how most modern investors build wealth without guessing which company will explode next. You're investing in the growth of the entire economy, and history shows that economies over time go up. Now, you might hear things like, the market crashed today, or stocks are booming this week. That's just noise. Day to day, the market moves like waves, sometimes calm, sometimes stormy. But over the long run, the trend has always been upward. If you zoom out on a 50-year chart, you'll see constant growth despite every crash, crisis, or recession. That's why the best investors say, time in the market beats timing the market. So let's bring it all together. The stock market is not about luck or gambling or trying to get rich overnight. It's about owning real pieces of real businesses that create real value. And the longer you hold on to good ones, the more your wealth compounds. If this helped you finally understand what the stock market really is, you'll love the next video. We'll break down ETF, the easiest way to invest in dozens or even hundreds of companies at once. It's how most investors build wealth without having to pick individual stocks. So don't miss it. That video might change how you think about investing forever.